everyone, it's Reed. Today I'm going to talk about something a little different. Money that doesn't even exist. Now, I've always been kind of a suspicious person. When people tell me things, I'm like, should look into that. And I usually end up digging into things. And I've discovered along the way that most people are full of crap. Immensely full of crap. And then there's also the house of cards that exists all over the place. There's a lot of them. And the only thing keeping them afloat are perceptions and bubbles. And the belief that, hey, this is going to work for me too. And so they're all riding this giant house of cards and bubble. But if one thing goes, it all comes apart. Which leads me to the stock market. I know we've seen all those videos all over the Prepping Network. The economy's gonna die and all this stuff. Get your money out of the stock market. You need gold and silver to save you. Well, that's not even close to what I'm interested in. What I'm actually interested in is something a lot deeper, the very fabric of the stock market itself. And I haven't been able to prove this yet, but I'm digging into it. But I want to share with you what I'm looking at specifically. See, it got me thinking way back when year 2000, when dinosaurs roamed the earth, for some of the younger viewers that are out there, and I had entered the workforce, and I started actually having deductions from my paycheck to go into my 401k, and I could invest money. Ooh, interesting. How does all this work? How does one make money? Well, you put money in, you play with it, you say, oh, I want to buy this mutual fund, I want to buy that. And so I opened an IRA, started putting my own money in so I could buy individual stocks. Ran into a problem, rather significantly, was my idea of what a stock should be worth did not match the market at all. Not even close. And see, I was a person that believes in book value. See, I've actually taken accounting courses, quite a few of them. So my idea of what a stock should be worth would be you take the assets of the company, you take minus all the liabilities from it, so you have a new number, and hopefully it's positive. If it's a positive, that's good. That's actually what I was after. And then you take that number, and you divide it by the number of outstanding shares. Now, if that number you get, say $20 a share, if the stock is below $20 a share, it's less than its book value. I considered that a good investment, and I bought it. Well, a lot of the stocks I bought like that, they didn't do anything. It turned out the stock market moves a lot on hype and perception. Really strange. And then when the giant housing bubble exploded, in the end of the 2000s, so like 2008, 9 or so on, when things started just coming apart, it really got me thinking. And a lot of times they talk about, hey, look at all this money that disappeared from the stock market. All this, wealth just evaporated. And then you hear people say, well, it didn't really evaporate. That money, people got it on the short sales and they took it and moved it elsewhere. But when I started thinking about that, I was like, wait, what the heck? That doesn't make much sense to me. It doesn't make any sense. In fact, this whole stock market thing doesn't make any darn sense. And with digging through it and all that, basically, I decided the stock market is gambling. That's what it is. It's gambling. You're putting money in, and you're hoping that perceptions, demand, and such like that are going to push the price higher, thus making your stock more valuable. When you sell it, you've earned a profit. What they say, you're an investor. Well, this is where I disagree with everything out there in the literature. I don't think you're an investor. I don't think you're an investor at all. Let's go back to some of the beginning here. When a company decides to become a publicly traded company, they get a bank to finance it and put the deal together, and then the bank is going to sell the shares and put them up on the stock market for trading. Now, the company is going to get a large sum of cash. Let's say they put it together. So like you have a company that's going something, they're going to offer 1 million shares at $25 a share. The bank underwrites it, puts it together, gets all this stuff ready. So the company gets, $25 million for that. It goes onto the stock market, and due to supply and demand curves, basically the prices of stocks are determined by computer algorithms today. You don't see much of the people bidding on the floor for what it is, but it's a computer algorithm. So there's orders placed in the system that say, hey, I want 500 shares at $28 a share. But say there's another order that says, I want 1,000 shares at $30-something a share. And so it's matching to see what the optimal exchange in the supply-demand curve is going to be. The algorithms themselves aren't super complicated, and they're pretty easy to understand when you dig in them. But that's what it is. They are balancing the supply and the demand. So if you've got a bunch of shares, like 4,000 shares outstanding to be sold, like you want to sell them, and no one wants to buy that many, it keeps dropping the price until suddenly, hey, we can match this up and get 4,000 shares. Or it's going to keep dropping because it can't even match the offer. Now let's look at the other side of that. We've got a bunch of people wanting to buy the stock. It's really in vogue right now, the new Google or something. And everyone wants it. So they say, okay, we've got all these orders, but there's very little available out there. So the price keeps moving up and up and up until a lot of those orders drop off and it's past, what it was put in for order, and then it can be executed. That's how the price can climb. Now, did the company get this additional money? The difference between when they went onto market and then what it recently sold at? No, they didn't. Well, wait a minute. Was additional money put in to represent this growth so that, there's all this money between the offer price, the initial price, and what it's at now? Was all that money put in to cover that? No. Interesting, isn't that? So what I'm digging into is I think if you actually look at the amount of money, the base price of the stock of when it went in, and all the volumes and trades and all that, how much beyond what the real value that was entered into the economy, the company, what it received for its IPO, versus what's been traded in and out, how much of that is fictitious? You starting to see what I'm saying? I hope so. I know it's a little subtle here. What I'm looking for is to see how much money is represented in, say, like stock accounts and all this stuff in the market as a whole, but there's no real underpinnings of that money. That money that is listed there, that is shown saying, oh, look at how much money is in the economy, how much money is available here in the stock market and all that stuff. So what I'm digging into and really looking for is looking for that amount. How far away from the actual money that was given to the company is the stock price? Now, if you take a look at the volumes and trades, how much it was traded here, how much it was traded there, and the prices and all that, you can sort of calculate it and start to get an idea. And that's what I'm digging into. Now, there's not enough historical information for me to find out this answer and look at that long term for the whole life of the stock market. It just isn't there. However, there is data for much more recent things. Around in the 90s and such going forward, there's a lot more data. The only problem is it costs money to access. I'm looking for ways to find a free or extremely cheap way to access enough to at least let me approximate to find out, is the stock market just a giant balloon and inflated way beyond what money ever entered the economy, and it's only backed up by perceptions? Or is there enough money actually going into and out of it to actually build a solid foundation? Well, if you're watching my channel, and you can tell how suspicious I am at times, you can guess which side I'm suspecting is going to be correct. I fully believe that the amount of money that is represented in those account values, those sayings of all this stock and all that, is way beyond the actual money that really went into there. That is a giant, humongous bubble. I know, interesting, right? Now, as I dig this up and figure it out and put it together, I will eventually make an updated video and make a PDF or some sort of report that people can download and look at. But it's going to be a while. It's going to take quite a while, and I don't have a ton of free time. But it's my suspicion. Like I say in science, we form a hypothesis here, and it's falsifiable, which is good science. Very directly falsifiable. Getting the data and all that will show I'm completely wrong or right on the money. And from there, analyzing the data and stuff like that, you can draw a conclusion, which is what I'm after. But I've always been really suspicious about the stock market, especially with how much trouble I had. What I think, especially since I'm a technologist, what I think technology companies are worth isn't even close to accurate. They move on a different perception, and it's not one I follow. I stay away from the stock market as much as I can because it's become a box that doesn't make any sense. The original idea that you would put money in, own an interest in a company, be able to influence the decisions made by the board of directors, and get a dividend, or your stock price will increase as the book value goes on, was the original purpose of it. However, it has moved vastly away from that. There's all these trading companies trying to do high-frequency trading, all these other things, with these AI algorithms looking to match things up and find these little shaves and make all this money here and there. It's so far beyond what matches normal human perception, it's just plain crazy. And the people making money, a lot of money in the stock market in a lot of areas, what you can look for is a lot of insider knowledge. I highly suspect there is a huge, immense pile of insider trading and unfair advantages people are using to make large wealth in the stock market. Of course, other people that are what they're doing is effectively taxing the movement of the money in and out of the stock market are also getting very wealthy. And I've always been very concerned about this stock market. That's what we put all our money in for investments and retirement and everything else. And so you can see where they've put up a lot of barriers to entry to perpetuate this facade, if it is a giant house of cards, is they say, oh, you can get a retirement account, but you're only allowed to invest in, institutional grade investments. So all the money through 401ks and stuff like that, employer-sponsored ones, pension plans and all that money, throws additional money into the stock market. This keeps the price up on a lot of the stocks, keeping that supply-demand curve where they want it. See, if someone like Bill Gates, who, when his company first went public and he became a billionaire with all that stuff and he was doing great with Microsoft, he decided, no, I want my billions in cash tomorrow, sell all my shares, the price would absolutely collapse and fall through the floor. Then it would be a giant disaster. People would be going, oh my gosh, Microsoft stock has collapsed, all these investors leaving. Well, investors. And everyone else is going, oh my gosh, what happens? What's going on here? And then it falls through the floor. And then the stock markets aren't going to list it and everything else. Bill Gates can't get his billions that way. Instead, people have to slowly sell off what they own, and they're interested in the company in lots so that they don't influence the supply-demand curve enough and then cost them their fortunes. Their fortunes that they have and what they possess are actually just fortunes on paper. What they can actually tangibly get is far, far different than what they are represented at on paper. Sure, they can get their hands on millions of dollars, far beyond what you and I can lay our hands on, of course. But they could not say, hey, I want my $100 billion right now, please get me a check. That's not going to happen. And see, that's why I'm really interested in saying, the money that is represented seems to be far beyond the actuality of what it could be actually realized and put to use against in the economy. It's way beyond that. And that's what worries me a lot, especially as we see more and more things. Oh, hey, let's privatize Social Security and everyone have an individual private Social Security account. It'll be like a 401k. They'll push more money into the stock market. One of the things I've been very worried about is, see, we have all these baby boomers retiring. A large swath of those people are getting out and leaving the workforce, and they're transitioning their portfolios in the stock market to more stable investments, treasuries, securities, stuff like that, so that it's less volatile and they can draw from it easily and use it to pay for their expenses. The thing is, there's far more baby boomers leaving the workforce than workforce people entering. I believe a lot of the people up there are looking at that going, we've got a bad curve here. This is not very good for us. And in fact, how are we going to keep the stock prices up with all these people wanting to transition out? Privatize Social Security. And there's other things they're looking at. That's one of them. So call me extremely concerned. But that's it for this video, and I presented my ideas, my hypothesis. Let me know what you think. Tell me if you think I'm absolutely nuts. But I'm going to keep working on this and gathering what data I can to see what I can find out for what's true or not based on the data available. Take care, everyone. This is Reed, out for now, and keep your tinfoil ready. But then, say you've got tons of people wanting to buy the stock, and so there's a huge demand for it and limited supply, the price is going to go up and up and up and up to match that up so that they can match. So say you've got a bunch of people